Stonk Insights, Stock Crypto Analysis and Discovery. In today's video, we're going to be talking about something we haven't talked about in a while. We're going to be talking about stocks in this video, but not just your traditional stocks. We're going to be staying along with the theme of cryptocurrencies, and we're going to be talking about crypto mining stocks. I have talked about Marathon Digital and Riot Blockchain before, but that was during the bull run. Those stocks were going through the roof. Everybody was talking about it. So, that video probably got lost in the weeds. But from now on, I'm going to be talking more in depth about these crypto mining companies, not just Marathon and Riot. There's a whole slew of crypto mining companies that, to take a look at to see if they are a good investment opportunity. And I'm speaking for myself because I'm not a financial advisor and I can't tell you guys what to do, but this may give you some ideas of what's out there as far as crypto mining stocks in the traditional finance sector, so you can have exposure and have the security of the SEC and regulations. So let's get into the video. Okay, so we're talking about crypto mining companies or crypto mining stocks. So first, what is a crypto mining company? Well, cryptocurrency mining companies use computers to solve complex computational problems to validate transactions on a blockchain and generate new cryptocurrency coins. Cryptocurrency can then be held and used for certain transactions or be sold for fiat currency. And just to expand upon that, these are actually physical companies. They report to, the Securities and Exchange Commission or the SEC or whatever country, their regulations are. They're reporting to those countries, and they have, numbers on a certain time frame, monthly basis, quarterly basis, and yearly 10Ks and whatnot. All right, so this is, just looking at these crypto mining companies, and this is the best of both worlds, okay? So let me just explain in my terms. So from the traditional finance side, they have regulations. Now, I know you're thinking, what are you talking about? Regulation is bad for cryptocurrency. You can say that, but then you have the examples of FTX, Luna, Voyager, and these other cryptocurrency companies that completely failed. And once you open up the hood and look under it, you see that it was a disaster from the get-go, that under normal circumstances, they wouldn't even make it that far. So I know, I was on the bandwagon of no regulation whatsoever, but we do have examples that we can point to show that regulation in some sense is needed. The second thing I have on there is that it's liquid. Okay, the traditional finance system has been out for almost forever, which means that there is a lot of capital within the traditional financial system. So it's very liquid. Unfortunately, with the other side, it's newer, so it's illiquid as far as in comparison to the traditional finance world. Okay, they have regularity of financial statements. So again, they do have, some companies have monthly reports, some companies do quarterly, everybody does a yearly report, but they do have some type of regularity for releasing financial statements so you can see the health of the company. The traditional financial system has been out for a long time. It has longevity. It's been proven, even with its ups and downs, that it does have staying power. And it's, so it's been out for a while. And it's been, for the most part, adopted for everyone across the spectrum. Okay. The decentralized side, is newer. So, it's in its infancy. I wouldn't really say it's been adopted worldwide yet, but obviously traditional financial system, to keep the world running, it had to have mass adoption. So let's look at the other side of the decentralized financial side. So first, this is, you get exposure to a new asset class. Okay, when you're in DeFi, this is something that hasn't been out for, it's been less than 20 years that we've had these decentralized financial tools, way less than 20 years. I'm just using that as, as a spectrum. And, so it's exposure to a new asset class. And with that, there's the potential for exponential industry growth. Okay, with these things being in their infancy, we haven't even scratched the surface to see the potential of what could it be. So far, with the use cases that we've used so far, they haven't really been groundbreaking or picked up and been adopted on a mass scale. So that does show, though, that there is a potential for this to just explode out of the seams. You do have the possibility of outsized returns because of the first two things I said. With this being a new class, there is no peg as to what this asset is supposed to be. So sometimes you get 1,000x returns, 100x returns. You're seeing ridiculous oversized returns with this new asset class. Adding this asset class to your portfolio gives you immense diversification. With it being new, something that you've never seen before, it can help or hurt you. Some people, they limit it to a very, very small percentage of their portfolio. But again, just adding this new asset class to your portfolio diversifies it. And potentially, it's been stated that this new asset class can be a hedge against inflation. So we've heard that term throughout the end of 2021 and all throughout the 2022. Inflation has been in the headlines. We see it on the grocery stores. We see it when we go out shopping. Everything is more expensive. So this new asset class, cryptocurrencies, decentralized finance is supposed to be an inflation hedge so that you can protect your money and not lose it to inflation. Now, with all that said, you would think that it's all shiny, everything is great, but there is some caution even with these Bitcoin mining companies. Okay, so with the fact that, and I'm saying Bitcoin, but crypto, but the biggest cryptocurrency that's being mined is Bitcoin. You don't see adoption of mining other cryptocurrencies yet. I think Hive was mining Ethereum, but Ethereum has switched over to proof of stake, so that's no longer the case. So Bitcoin is the main company that's being mined. So with that being said, these companies are all dependent on the success of Bitcoin. If Bitcoin goes up, the assets that these companies hold go up. Okay, if they're mining Bitcoin and Bitcoin goes up, then they're getting an appreciating asset. If Bitcoin goes down, if Bitcoin is in a slump, if Bitcoin is in a bear market, which we are currently, that could have adverse effects on these companies, okay, because they still do have to report. They still do have financial obligations and liabilities that they have to keep up with. So if Bitcoin is going down and their assets they have on the books are going down, this could cause disaster. With that being known, it is extremely volatile. The volatility within this asset class, or I'm not talking about cryptocurrencies now, we're talking about the crypto mining companies. So we're talking about companies that are actually regulated. But even with that being known, because they are dependent on the success of Bitcoin, and with Bitcoin going up and down in wild swings, so does the price of these stocks throughout the trading day. You'll see them taking wild swings. The volatility is all over the place. So that is something to be aware of. So we talked about regulation in the previous slide being a positive, but regulation is that double-edged sword. It can be positive, but it can also be negative. And in this sense, when we're talking about regulation of the mined asset being Bitcoin, that can be a problem. You're having regulation. You don't know how it's going to be taxed. You don't know how these regulators are looking at regulating Bitcoin, to be honest, without, getting more convoluted. We don't know anything. So with that being in the mindset, being in the back burner, that is something you got to be aware of. Just keeping the eye out on what these regulators are talking about when they're in these town hall meetings or whatnot, and just seeing what they're trying to put on the books. And then lastly, but certainly not least, the geopolitical circumstances surrounding the asset class Bitcoin that could easily, in so many factors. And what I'm talking about now is, let's talk about China. China, they banned Bitcoin mining. So if you're a company in China and you're, depending on mining Bitcoin and now it's banned, you're going to have problems. More recently, we heard about New York, which, without getting too much into it, they essentially ban Bitcoin mining if it involves fossil fuels. So if you're in, if you're invested in a company that's in New York and they're not doing hydropower or some other type of power or solar, if they're using fossil fuels, that could have a significant impact on your investment. So these are just some points of consideration, when I'm looking at these companies, how I'm going to be evaluating them, how I am going to be investing. Again, this is not financial advice, but this may help you when you're looking at these companies. So first point of consideration is that the next Bitcoin halving is approximately on June 8th, 2024. Approximately, it goes by the block. So, but the block is approximately on that date. So that is a very important date. You want to put that in your calendar. And the reason being is because the halving essentially makes Bitcoin more scarce. And with it being more scarce, that's what most people see as making the price appreciate. So that leads into this next point. These options contracts or LEAPs, the long-term equity anticipation securities, that's past the halving date. When I'm looking at these options contracts, years, 2 years out, but specifically it has to be past the June 8th, 2024 calendar date. Why? This just leaves it to where I don't really have to think about it. I know that Bitcoin is becoming more scarce, which supposedly is supposed to have the price, go up there to keep up with it. And if that happens, if I purchase a contract for a company that has Bitcoin as an asset, if the price of Bitcoin is going up, I'm hoping that the price of the contract, I'm hoping of the price of the underlying security goes up. Okay. But that's just me looking at it, and that's what I'm looking at. So basically I'm looking at when I'm investing in these companies, not only am I investing in the underlying, but I'm also going to be looking at the options contracts and looking at LEAPS contracts past the halving date of June 8th, 2024. Okay. We're also going to be looking at, are the financials healthy? Okay. We're going to look at the balance sheet, which gives you just a snapshot of the company's financial position at any given point in time. We want to make sure that, they are still profitable, or if they're not profitable, that they remain solvent, that they don't go through insolvency and they don't go bankrupt. We want to look at the income statement, which shows you what the company earns, what it spends, and if it's making a profit over a specific period of time. So, we're talking about June 8th, 2024. We're still in 2022. So these companies have to make it to that point. They have to make it to this halving time. This is the time that I'm putting in my book as, something is supposed to happen. I'm not saying that something will, but they have to at least make it there. And then we're also, I'm going to be looking at the cash flow statement, which provides a detailed picture of what's happening with the company's cash during a specified period. So we're talking about cash flow from the operating activities, and in this case, it's a no-brainer. The operating activity is mining cryptocurrencies. Now, just to pause there, not all of these companies are selling their crypto. A lot of them are hodling for, probably what I'm looking at here was June 8th, 2024, or they're looking at some other time frames to, sell crypto. Some of them have been forced to sell off some of their crypto so they can maintain solvent and, meet their obligations. But for the most part, I won't say that. Some of them are selling it, some of them aren't selling it. Okay. We're also going to be looking at cash flow from investing activities. So, are they investing in other companies, are investing in other cryptocurrencies? That's all going to be shown in the balance sheet and the cash flow from the cash flow statement, and also cash flow from financial activities. Basically, can a company remain in business till the next Bitcoin halving? That is such a big point. And what I'm looking at, and hopefully the ones that I'm investing in can stay solvent, can stay in business through the next Bitcoin halving. All right, so what I did here, this is Robinhood. I just compiled a list of some of the Bitcoin mining stocks that I've been looking at. So we have DigiHost Technology, Hive Blockchain Technologies, TeraWulf, Iris Energy, Argo Blockchain, Core Scientific, Greenwich Generation, Cipher Mining, CleanSpark, Stronghold Digital Mining, Hut 8 Mining, Bit Mining, The nine is just now starting to transition into Bitcoin mining. So that's why I have them on this list. Riot Blockchain, Canaan, Marathon Digital, Bit Digital. And I don't have it on this list, but also Bitfarms. I am invested in them. So they are also on this list. So that brings it up to 19. If there are some companies that I've missed, leave it in the comments down below. I'll probably add them to this list, take a look at them and see what's going on with them. Okay, this is my options watch list. This is just something I'm building up right now. So you do see I do have some 2024 expiration dates here, June 19th, 2024. This is just so I can keep an eye out on these contracts for that time frame. But again, we're looking more to purchase contracts past the June 8th, 2024 mark, which is after the Bitcoin halving. So you see here at the bottom half, we show a lot of companies that have the January 17th, 2025 expiration date, which is well after the Bitcoin halving. So that's the video for you guys. You know, this is just an introductory video. We will be taking a closer look at some of these companies, taking a closer look at the underlying, looking at the balance sheet, looking at the income statement, looking at the cash flow statement, just seeing if these companies are well enough, healthy enough to make it to the halving. If they are, then that is something that I will be looking into. If not, then who knows? Maybe they can clean it up, maybe not. But what are your thoughts? Are you interested in any Bitcoin mining companies? Are you invested in any of these companies? Have you taken a look at any of them? Do you have any of these options contracts? Are you looking at it specifically from the point of when the next Bitcoin halving is? Whatever your thoughts, leave them in the comments down below. Thank you guys for watching this video, and I'll catch you in the next one.